Well, folks, hello and welcome back to the Money Wisdom Podcast powered by Johnson Brunetti. I'm your host, Nick Colantuno. I'm a certified financial planner up here in our Boston, Massachusetts offices, joined as always by my co-host, Jake Dozer down in Connecticut. Jake, why don't you introduce yourself?
Yeah, thank you, Nick. My name is Jake Dozer. I'm a certified financial planner here in our Connecticut offices, and looking forward to covering all the things we have today in our episode.
And things we have lots of, Jake. This is going to be a fun episode. It's all about insurance. And obviously, there's lots of different types of insurance. And some of them, I would say more than others, are things you really, really, really need to be thinking about as you approach this retirement phase of life.
Yeah.
So again, the oldest saying about insurance is the only time you can get it is when you don't need it. So again, the idea here is it's all about the unexpected and how to cover the costs associated with those unexpecteds. What can they be? They can be accidents. They can be illnesses. They can be natural disasters, right? So the conversation today, and really, Jake, the conversation you and I are having with our clients as it relates to insurance is a conversation about peace of mind. And aren't we in the business of peace of mind, my friend?
We are.
So let's break down 6 insurance options that our clients need to be thinking about in retirement. The first goes without saying, health insurance, Jake. Talk to us about health insurance, my friend.
Yeah, this is a big question a lot of folks look at and are intimidated by to make the transition into retirement, specifically early retirement, because if you're going to retire before 65, so early as it pertains to Medicare, the natural question you're going to have is, where am I going to get health insurance? Well, what you're going to have the choice is to either continue on your health insurance at work through COBRA. Maybe you're one of the rare ones like us in the state of Connecticut. We have some tier 1 and tier 2, especially state employees that are covered from health insurance through their employer, even into retirement. But, let's not assume you're one of those because that's pretty rare nowadays. And so you're going to either have to choose COBRA or you're going to have to go on the Affordable Care Act, which in Connecticut, at least, is through accesshealthct.com. One of the benefits to that program to some folks is that when you visit accesshealthct.com, what you'll find is that the premium that you pay is based on your income level. It is not based on your assets. So what that translates to is you could have $10 million, but if you have no taxable income, you aren't paying anything for health and care insurance. So we take advantage of that, right? So a lot of times folks will come to us and they'll say, look, I want to retire early, but I feel like I can't afford it if I still got to pay $1,000 a month for health insurance. And if we can look at it through the right lens and get enough head start on it, we can, basically put you in a position where we can get income from a lesser or no tax place for the first few years. So you're paying little or no health insurance costs. I did this with a client in between 62 and 65. Him and his wife saved $78,000 in health insurance premiums.
Whoa.
So this is something that we can definitely help with. It required some forward planning. And it requires being intentional about where you take your income in early retirement. But this is a conversation we have a ton about. And then health insurance, of course, becomes then at age 65 or older. Now you've got Medicare in the mix. You got Part A, which is free. Part B, which as of 2026 will cost about $206 a month. And it could go up from there based on your income level. And then you've got supplement plans, right? The whole world of supplements. So you need to be aware of Medicare, Part A and B. You need to be aware of supplement plans, which 90% of people on Medicare have a supplement plan. Could you get away without it? Technically. Should you? Probably not. And then early retirement, Affordable Care Act, used to be called Obamacare, Access Health CT here in Connecticut, at least. You guys have a portal?
That's the Massachusetts Health Connector for all our viewers and listeners here in Massachusetts.
There we go.
Yep. Perfect. Jake, the next type of care that our clients need to be thinking about, and typically most of them are thinking about it, doesn't mean everyone acts on it.
Yeah.
But this is long-term care insurance, folks. And really what long-term care insurance is, a lot of times people think, nursing home or assisted living, things like that. Long-term care insurance policies cover you in the event of a chronic illness.
Yeah.
A chronic illness is the inability to perform 2 of 6 activities of daily living for 90 days or longer. And really, there's 2 types of vehicles that our clients are using to address this what if. There's the traditional long-term care insurance. And in this case, folks, if you don't want to open the book to some pretty strict underwriting, this might not make sense. They're going to do blood tests and get medical records and probably a telephone interview and, pretty strict underwriting.
Yeah.
It's rather difficult to qualify for. It is rather expensive. And on top of that, the premiums are not guaranteed to remain level over the life of those contracts.
Yeah.
So, not to say it's a bad thing, but if you really want to insure just for the what ifs of, going into a nursing home or assisted living facilities or home care coverage, having a nurse come in to cook and clean and that type of care later on in life, a traditional long-term care policy is one way to do that. Now, to outline some of the costs here in Massachusetts, there in Connecticut, Jake, I mean, there is no other place in the country where this type of care is more expensive than where you, me, our clients live.
That's right.
So just be aware, if you don't want to be fully out of pocket for the costs, insurance is something that you should think about. Now, the other option, aside from that traditional long-term care, are these hybrids. And this is where, at least with my clients, Jake, I'm seeing a little bit more traction. It combines long-term care coverage in some type of an investment or insurance-backed vehicle, whether it's an annuity contract or, life insurance, death benefits can have hybrid, factors associated with them where you can advance part of that death benefit while you're living to pay for these long-term care costs. So in many cases, it means some less strict underwriting. Again, whenever there's a health insurance, claim being filed, they're gonna want to see some documentation, making sure that the risk is worth it for the company. But again, these hybrid policies are just a way where maybe you put down a larger chunk of money and then you don't have these ongoing premiums, or maybe it's a way where you can take cash in the bank that might be sitting in a fixed annuity or a CD, just kind of making 4 or 5%. You can get that same interest. But if it's in an annuity, you can get tax deferral on the growth of that money. And then if you need it for long-term care, it can actually double or triple that money. So, there is an insurance element in there. That's a whole other, podcast episode that we could do. So I just wanted to touch on it. Anything else you want to add on those options, Jake?
Yeah. I mean, the other thing you can think about is some folks think, well, if it's too expensive, what are my options, and how am I going to get coverage? Well, there's some things to remember there. So number one, we need to be able to quantify what too expensive is. So if you're looking at insurance options, you should first plan on being able to afford your general, expected retirement, and then add on to that, if affordable, long-term care insurance. But you don't know how much you can afford until you first have an income plan for your typical lifestyle. So start with a larger plan, then zoom in to look at insurance options. Beyond that, there's two other options, which is you could self-insure, which is to say, hey, I have enough money that I don't need to buy insurance for that. That's hard to do. It doesn't mean it's impossible, but it is something that our clients with, oftentimes $2.5, $3 million or more are thinking about. You can also rest in knowing this is a dual-edged sword, but everyone gets the care they need, right? Medicaid is there for if you run out and need care provided by the state. And my point being is that don't feel like you have to buy insurance in order to have care. Just understand you will not get to dictate the quality of that care without insurance or without paying for it out of pocket. So have a conversation about, hey, are we going to be okay if we live a long time? What if what if my significant other or I pass away? Will the survivor be okay? The next question should be, what if we have a major unexpected expense such as long-term care? That's where planning for long-term care fits into place, whether you're self-insuring, buying insurance, buying some sort of hybrid plan, or not intentionally not buying insurance because you might not be able to afford it. Either way, make a concerted effort to make an informed decision about your situation.
Yeah, that's well said. And I also see a lot of folks we work with. All of our clients are great planners. They wouldn't work with us if they weren't. But a lot of folks have already planned for unexpected healthcare expenses. And what I'm getting at here, Jake, is a lot of people have already earmarked a certain portion of their money, and they'll say, oh, that cash over there in the bank, that's for our health. That's for our health expenses. Well, if that's the case, let's have a conversation about leveraging those dollars through one of these, like hybrid vehicles or something of that nature. And oftentimes, if you're in that phase of life where you're forced to take these taxable distributions out of your IRAs, you're in those required minimum distribution years, and you find that money is just coming out of the IRAs, you're paying the taxes, and then it's going in the bank. maybe we look to put that into some sort of a long-term care vehicle instead. That can be your source of monthly premiums.
Right.
And whenever we talk about premiums, we're also now getting into the third type of insurance a lot of our clients are asking about, and that's life insurance.
Yes.
So tell us, Jake, about the two different types of life insurance that are out there.
So there's term life and there's permanent life. Term is good for a term of time or a period of time, typically 20 to 30 years. 20, 25 years is the most common term we see. And then you have permanent life insurance, and that comes in different flavors: variable universal life, index universal life, just traditional whole life, and lots of different levers in between. We spend just as much, if not more, time talking about people who have insurance and are maybe thinking about, do I even still need this, than we do about looking at new insurance, because of the the folks that we're at and the stage of life we're in. But needless to say, one of the biggest jeopardies that a significant other can face is that if there are two spouses and one passes away early, the survivor not having enough money in that instance. Maybe you're both okay as long as you live a long and happy and healthy life. But life insurance that's probably the most specific scenario where we need to figure out if insurance is applicable. But just understand that the insurance you have through your work, you're likely not going to extend, because it's going to be obscenely expensive once you leave the umbrella of your employer. If you have term life, understand from a pure perspective, it is cheaper short term, but it will expire at some point. And if it doesn't expire and it's renewable, the premiums are going to go up each year. And if you have a whole permanent insurance, you might be over-insuring yourself. And if you aren't and you need it, let's be very specific, because those products can be real expensive. So we help folks navigate through that as well.
We sure do. So we are halfway through, right? That was insurance number 6. We talked about health insurance, long-term care insurance, and life insurance. So while we're halfway through, I want to offer everyone a resource. Get your copy of our Money Map book. Text the word MAP to our team at 800-757-0436. It's this book you see over my right shoulder here. It's going to talk a lot about us, a lot about our philosophy when helping folks like you address the things they need to be addressing in this next phase of life. All I will say, folks, is if it speaks to you, it's probably a good sign that we're the right fit. So text the word MAP, M-A-P, text it to our team at 800-757-0436. It's going to uncover really be able to shine light on our philosophy as a firm and talk about some of the strategies and the things that we're talking about folks like you with all the time. So get your copy of that Money Map book. Going into our next type of insurance, Jake, homeowners insurance. And I know you have a background in this. This was where your career started, wasn't it?
Yeah. Right out of college, I went to work in insurance, property and casualty insurance, or home and auto. I worked for State Farm. Jake from State Farm. Yeah, I should be getting residuals.
Come on.
If you see this, you tag State Farm and make sure they start giving me checks. But in any rate, awful. I would call people and they would hang up on me because they thought I was prank calling them. I did wear khakis. I do sound hideous on the phone. I've heard it all. I don't need to hear anymore. All right. No, I'm just teasing. But homeowners insurance is where it starts. Whether you're renting, whether you have condo, whether you have a house, you need to make sure that you have the appropriate level of coverage. If you are paying off a mortgage, that's a lot of times the stage of life where people are coming into where their mortgages are getting paid off. Make sure that you're starting to set aside money, since your escrow account no longer exists, for those taxes. You need to be evaluating the affordability of your home in retirement as it pertains to taxes and insurance. As you're entering retirement and no longer having a mortgage, you need to be asking yourself, am I in too much of a house? And an indicator of that could be the health insurance premium that you're paying. You also need to make sure that one of the things that I think is most important is, when you're thinking about your homeowner's insurance, understand if you have a named peril or all peril policy. A named peril puts a list of things down they will cover, and anything not on the list is not covered. An all peril policy is the opposite. Everything is covered except these things. Those are typically more comprehensive, more expensive. So is homeowners and auto insurance the same? It just depends on which price is cheaper. No, different companies insure the same way. And be aware of the type of policy that you have, and work with, my big recommendation is independent agency that can shop you around.
Companies are willing to compete for your business, folks. You should be, really shopping your insurance around, I would say, every couple of years.
At least
Jake,
every two,
I see what you did there. Thank you. You talked about homeowners insurance and auto insurance.
Two birds, one stone.
Now we're moving. And lastly, what is an umbrella policy?
An umbrella policy, as the name suggests, sits on top of those policies. So if you have a certain level of home and auto insurance, a lot of times you typically have to have a certain level of home and auto in order to get an umbrella. But an umbrella policy is like a liability policy for your person. So if some sort of event were to happen on my policy that my typical homeowner's policy doesn't have a cover, the umbrella policy will sit above and beyond it. So I have an umbrella policy for like $2 million that says, look, if I have somebody gets in a car accident, here's a common example we used to talk about in the insurance world. My neighbor on my left side walks their dog across my sidewalk. Neighbor on the right side is walking the opposite direction. Dog from neighbor on the left bites dog from neighbor on the right. Because that happened on my property, I am liable. How bananas is that? It is. It certainly is. However, be aware that dog bite could cause a hospital bill that costs hundreds of thousands of dollars. If you do not have the right level of homeowners insurance, and sometimes you can max out and not get enough, then that would overflow into either suing you or now going against your umbrella policy. So be aware, normally you want to have an umbrella policy that sits above your net worth level. So if you have $900,000 between your house and your 401k and your money at the bank, well, then get $1 million policy, and then you're covered. Your entire net worth is covered by an umbrella policy.
I like it. Thank you. Get a second opinion on your insurance, folks, and also get your Money Map book. Text the word MAP, M-A-P, text it to our team at 800-757-0436. Again, MAP, M-A-P. Get your copy of our Money Map book to 800-757-0436. Now, Jake, we're back at it again with what is quickly becoming my favorite part of these episodes, our Mailbag Minute. And viewers, listeners, thanks to all you for submitting the questions that you submitted. We've got lots of them that relate specifically to insurance. So we've picked out a few of those. And Jake, now it's your turn to give us some of that secret sauce.
Let's do it.
First, we have a question specifically about long-term care insurance. My father purchased long-term care insurance in the early 2000s for my mother. After my father's passing, my mother had to move into an assisted living facility and now requires skilled nursing care. Are plans like the one my father bought still available today? And if so, are they still affordable?
This listener's picking up on a wise thing, which is there's these old Cadillac plans and they don't make them like they used to. Now, does that mean that you can't get a similar type of coverage? No. It just means that it's likely going to be more expensive than somebody who bought it 30 years ago. The long-term care industry went through a major overhaul where they realized they were underpricing policies. Companies went out of business. Obviously, that's not good for the insurer or the insuree. And so that translates to be aware of the type of policy you're getting, what it covers: assisted living, nursing home, skilled nursing home, memory ward. Some people I see buy a home healthcare policy and with the hopes, I'm never going to go in a nursing home. Well, how do you know that? You want to make sure that you have enough coverage for what is reasonable. There's different types of policies that cover different things with different premium amounts. Measure twice, cut once, like anything.
Yeah. And again, on that same note, for any of you listening who have these older long-term care policies, I'm sure you also have a couple letters that you've gotten over the last, 10 or 15 years from the insurance company saying, hey, we value your loyalty to the firm, but we're increasing the premiums on your policy.
That's right.
So things are starting to catch up to these insurance companies, and the cost of care is not getting any cheaper. So
that's right.
Yeah, good question. Our next question is centered around Medicare. Jake, what are the differences between Medicare Advantage and Medicare Supplement plans? What are the pros and cons of each?
This is a whole episode type of question. I'm going to hit you with fast.
You only have a minute. So.
Fast and quick. Medicare Advantage is free, but it's very under coverage. It's generally it's free, but it's got no out-of-pocket and deductible limits. So that's really the biggest thing you need to be aware of. So if you're looking for the cheapest thing, it might work. If you're looking to be comprehensive in your coverage, not the right option. A supplement, in contrast, sits on top of your Part A and B, and it supplements those plans. It basically converts your three parts, A, B, and supplement, into what it looked like when you had health insurance with an employer. Why is it more complicated in retirement than it is in working years? I do not know. Talk to your elected officials. That's not a conversation for me.
Do they know? Do they know?
They don't know either.
Finally, we have a great question about budgeting for insurance. How do you budget for long-term care insurance when you're already retired and on a limited income? Is it too late?
It's not too late necessarily, but at this point, you got to play the cards you're dealt more than you can proactively get ahead of it. So what that translates to is we should be sitting down and doing a stress test on your portfolio to help you understand in what scenario would a long-term care event shipwreck your plan and result in you running out of money. In what scenario would a long-term plan event shipwreck your surviving spouses if you do have one of those, right? So I don't know if you can afford it. I don't know if you can afford not to need it or somewhere in between. I don't know if you even need to be thinking about it. But I know that to put your fear to bed, we need to run an analysis to determine first a baseline. Does it matter at all? And then from there, we can make an informed decision of how to address it effectively. So you first have to have a retirement plan for the expected, and then we can get into the unexpected. But let's have that conversation.
Absolutely. And no better segue to have that conversation than getting your hands on our Money Map book. Like I said earlier, folks, that book is going to shine some light on the road ahead. It's going to shine some light on who we are as a firm. It talks about the strategies we use with clients, talks about our financial planning philosophy for folks like you, folks in this exact phase of life. So to get your hands on that free Money Map book, text the word MAP, M-A-P. Text it to our team, 800-757-0436. We'll get that book out to you. Again, text the word MAP to get your free Money Map book to our team, 800-757-0436. This has been an awesome episode, Jake. It's a pleasure talking with you as always. Viewers, listeners, we really appreciate you joining us on the Money Wisdom Podcast. I'm Nick Colantuno, and for my partner in crime here, Jake Dozer, we really appreciate you joining us as always on the Money Wisdom Podcast, and we'll see you next time.
Johnson Brunetti is a marketing name for the businesses of JB Capital and JN Financial. Investment advisory services offered through JB Capital LLC. Insurance products offered through JN Financial LLC.